Welcome back to Markets Today. We are talking about personal financial goals with a focus on investments. We are joined in studio by Rose Elangare, who is the founder of Vasili Africa. If you are just joining us, we have been discussing different asset classes. What I like that Ella has told us is if you bought land in Roca 10 years ago, you're sitting in the money. And she's trying to tell us where then should we be putting our money into if we are looking at real estate. Thank you for that overview and welcome back to the show, Ella. Then now, looking at the other different asset classes, are there other opportunities? We've talked about land, we've talked about equities, that's shares and stocks on the Nairobi Securities Exchange.
Yes.
Are there other options that are available to Kenyans today?
Yes, as we said, it's a more of a goal-oriented kind of year when it comes to investment.
Okay.
So we would look at even the people who are starting to invest, yeah? For those who are starting to invest, because probably they don't have a lot of money when it comes to putting in cash purchases and all that, they could do accumulation from low, it's more like a low risk investment,
Okay.
The money market funds and the like. If you want to get into stocks, but you don't have the courage to do it, you can try and get with a fund manager in balance fund and equity funds.
Okay.
See how they perform.
All right.
Yes.
Okay.
So just do your accumulation there and then diversify when it comes to the next maybe 6 to 1 year.
6 months to 1 year. Okay,
yes.
fantastic.
Yes.
So I like that you're bringing in the element of sub-products that the money market managers provide. And I know that's the space that you're in.
Yes.
What are some of the returns that some of these funds provide? Money markets, what's the best return? Balanced fund, equity. Maybe you can even describe what these funds are and the returns that people are able to get from them.
All right. So for money market funds, the highest return right now is at about 10.1% per annum. A money market fund is just basically more like a big chama, I would call it that.
Okay, that's
where
a nice
people
one.
put,
Yes.
where people put in cash, and then the investments are usually in interest-bearing securities such as government bonds, bank deposits, and the like.
Okay.
Yeah. So you have a guaranteed return to it, but not a fixed return.
Okay.
And the rates change on a daily basis.
All right.
Yeah. You earn your return in terms of an interest rate.
Okay.
Yes.
Okay.
So currently it's between, the average in the market is about 8%, between 5% from different companies to 10%.
To 10%.
Yes.
Okay, so that's
Yes.
the money market fund.
Yes.
And then when it comes to the equity fund, what does that entail, and what are some of the best returns you've seen?
Okay. For equity funds, the investments are usually in stocks, part of them in stocks and part of them in actually, most of them are usually in stocks, just a small percentage into the interest-bearing securities.
Okay.
For that one. So if you are not courageous enough to buy a stock on your own,
Okay.
you can join in with other investors. As I said, it's like a big chama.
Okay.
So you share the risk and you share the returns at the same time.
All right.
Yeah. The returns can go up to 8%, let's say, per return. However, you gain on a capital gain.
Okay.
So you put in your 50,000, maybe perhaps. At the end of the month, you see you have like 51,000. Yeah. So
interesting.
you have gained 1,000 shillings on
Okay.
top. Yes.
Okay.
However, you can also take a dip.
Okay.
Yeah, depending on the market, because that one it depends on how the market is prevailing.
Okay.
For a balance fund, it is a balance between now an equity fund and a money market fund, where some of the investments, like 50% is into stocks, 50% is into interest-bearing securities.
Okay.
Yes. The highest return I've seen so far is about 11%. However, it also gains on a capital appreciation way.
Okay.
Yes.
Fantastic.
Yeah.
Okay, so I have a question here. I'm just trying to see. So somebody is saying that they have invested in a money market fund, but they were trying to understand the day-to-day change in the value of what they've invested. And you said that for the money market, the interest is calculated daily.
Yes.
So the example we have here is someone's statement reads that the market value was 1,887, while the previous date was 2,072. So what could have happened? How do people then read and understand their statements?
Okay. So there are some companies that actually compound on a daily basis.
Okay.
Yeah. So you gain, your interest is about, let's say, 9% per annum. Yeah. the 9% now is divided by 365 days for you to get the daily return.
All right.
Yes. And then whatever you have gained for that day, if you have not done any additions or anything, it might be compounded to your principal amount.
Okay.
Yes.
Okay.
So that the next day now you have a higher return.
Okay.
That is why there's usually a daily yield
Yes.
and an effective annual yield.
Okay.
Now for the effective annual yield that is usually reported is, if my daily yield today is 9%, and if all things are held constant, nothing changes, my portfolio as a fund manager does not change.
Maybe I've put in, let's work with,
Yeah.
I've put in 10,000 shillings,
Yes.
and the effective annual yield is 9%.
Yes.
What does that then translate to?
I have to do that.
Okay, no, I mean,
because of the compounding
so let's say,
effect.
the compounding effect,
Yes.
so it changes.
Yes,
okay.
it changes.
Okay, fantastic.
Yes.
But I'm sorry, I cut you short because
It's
you are
okay.
explaining the difference between the effective annual yield and the
the
effective
daily yield.
Yes.
Yes. So if all things are held constant in the market, I don't lose any, I don't have any withdrawals as a fund manager.
Okay.
I don't have any, what do you call them, any inflows, and I don't have any withdrawals. Everything is held constant. My effective annual yield will be the one that has been displayed. So
Oh,
it might
fantastic.
be 9.5,
Yes.
maybe 9.5, and the other one is 9.9
Okay.
as the annual yield.
Okay.
Yes.
Okay, so that's
Yes.
why at times there's a difference. So
Yes.
you really just want to keep track of, I
Yes.
think what you're saying is really just want to keep track of your own records.
Exactly.
And then and start understanding from that
Yes.
point in time, as opposed to waiting 12 months and getting surprised by what
Exactly.
you see.
And since most of the companies are actually giving a statement, they send statements at the end of the month.
Yes.
It would be prudent to just be pulling them out.
Okay.
See how your performance, how you're performing, and that is how you actually even keep track of your goals.
Yes.
Are you near getting to the goal?
Okay.
Yes.
Okay. All right. So last year, when we started this conversation, you're saying last year the focus was emergency.
Yes.
Do you have emergency funds?
Yes.
And the other goal was, now people started saying, hey, I need to sort myself
Yes.
out, so
Yes.
get a second hustle.
Yes.
So revenue diversification was important last year.
Yes.
And having an emergency fund was important.
Yes.
Now this year, it's about being intentional and creating now goals for investments.
Exactly.
So how should people look at success when it comes to December? So as Mbithe, I'm sitting here and I can take on some of those things that I've been able to do.
Yes.
But now if somebody is watching us and they're saying, okay, Ella, what do I take from this? When you tell me to think about my goals, to think about my returns on investments, how should I think about that, and what will success look like? Help us paint a picture of that.
I think success will look, what you actually, on a personal note, success is different. Yeah.
Yes.
My successful story will be on a company level.
Yes.
A lot of people have actually learned how to invest, and they are investing very
Okay.
nicely.
Okay.
On your personal note as Mbithe, whatever goals that you put in, you need to have maybe 5 million at the end of the year.
Yes.
On a monthly basis, how much have you been putting
Okay.
aside? What kind of returns have you been getting? Are you nearer getting your goal? Because what portfolio allocation should be really for each person is work from the goal downwards.
Yes.
My big goal, crush it into small attainable steps per quarter, or per month.
Yes.
Put in whatever I'm putting in, the investment that I'm putting in, and then make sure I'm getting a very high return out of it, such that I will get to my goal within a shorter time than I expected.
Okay.
Yes.
All right.
Yes. That should be a successful story for
Okay.
everybody.
So
Yeah.
first, having a goal. Let's just start there.
Let's
having a goal.
have that goal.
Okay.
Break it down to attainable steps.
To attainable steps and
Yes.
execute.
Yes.
Then, based on your experience in the spaces that you sit, what would be a good return if I made X percent in Kenya, regardless of the asset class? And let's not talk about businesses, because businesses, you can double your money overnight.
Yes, you can. Yeah.
But let's talk about investing in other people's businesses, passive investing, where you're not active in the investment cycle. What would be an appropriate return for anybody saying, this is the minimum that I should expect? If I don't get this, I need to go find Ella and look for something else to get my money into.
That's a tricky question.
Okay,
Mbithe.
fair enough, fair enough.
But in the Kenyan environment that we are in, I think a return between 7 and 15% should be good.
That's a good return.
Yes,
and
that's a good
per
return.
annum. So at
That's
least
per annum.
you can target that.
Yes.
Okay, that's
If you
a
get
fair one.
higher,
yes. By all means.
It's a bonus.
It's a bonus.
Yes.
Okay, that's interesting because, you know, it's always interesting when you sit in a space and you're discussing returns here because just as we were discussing, some stocks in the US are up 121% in one day.
700%.
So are we third tier? Are we a developing country? But in our investment returns, you don't have to answer that.
I think we don't have a very active market, but let's see.
We'll leave it. Actually, that's right, because we have 60 or so odd companies yet. In the United States, there are over 6,000 companies.
Exactly.
So also the opportunity set
Exactly.
is not as vibrant.
Yes.
All right, that's all the time that we have today. But I don't know if there's anything else that you want to contribute as pertinent to this conversation before I take your parting shot on this, Ella.
All right. I think we've talked about it, but really have very intentional goals when it comes to your money. Be very vigilant when it comes to tracking it.
Okay.
And also be very audacious when it comes to your goals.
Okay.
Don't limit yourself.
Okay.
Of course, you might think that maybe the cash flow does not right now is not supporting your goal. However, if you break down your goal, you're able to reach it maybe by putting in kidogo kidogo hujaza kibaba.
Kidogo kidogo. I'm just here writing, be intentional, track.
Yes.
That's normally a place we normally fall short.
Yes.
Track and be audacious.
Be audacious.
I like that
Dream
because
big.
dream big. We're always dreaming big about other people's visions and plans,
Yes.
but we never sit down with our money and say, add a zero there. you know? Okay,
Yes.
fantastic. And is there any other parting shot that you want to leave with our audiences from today's conversation?
If you can be able to reach your goals when it comes to December 2021, be sure to celebrate.
Yes.
Be sure to celebrate.
How
yes.
do you normally celebrate your goals?
I mean, pay yourself first.
Pay yourself. So save. So put money
Save.
aside for
Yes.
your future self.
Yes.
Okay, fantastic.
Yes. And also have very, I call it delayed gratification.
Okay.
Yes, you will live the life that you wanted. However, will the 50-year-old self thank you for the life that you have lived today?
Do you know, that's an interesting one, even before we end, Ella, because it's the beginning of the year, so I normally take some time to also get my financial goals in order. So this time round, I was in a space where we were talking about what are assets.
Yes.
So, you know, we're like, are my utensils assets? Are my clothes assets? So I had to have a serious think, you know, a one-on-one with, hey, Mbithe, hii pesa unaweka kwangu, hizi nguo zitakusaidia on your 50. Because you keep buying and buying, and it's such a fantastic time to just track where you're at.
Exactly.
And find out where your money is. Because one of the things that I want to change, and the Lord help me, I hope no one asks me this or holds me accountable there, or they can hold me accountable, but just on that one, you tend to find that when you track, then you know what you need to focus on, because I was like, my clothes and shoes are not an asset.
Exactly.
They are not adding value.
Exactly.
I'd rather have you know, like a whole entourage or a whole diversified portfolio of different assets where I have tried to learn. So certainly I take you up on that, and I hope when I see you again, I'll make sure that you're here again next time, same time next year, but of course a lot in between, just to be able to do that. But what about accountability? Because you're telling us you need to be intentional, you need to track. You need to be audacious. It's very easy, as with anything else.
Yes.
January, February, focused, intentional.
Yes.
Easter happens.
Easter happens, yes. And that is why we're also being intentional, yeah?
Yes, okay.
Yes. So if Easter happens, am I able to travel and spend the money? If I have a goal, probably, that I need to reach by the end of the year, how am I able to save enough and also make sure that I enjoy the days that are in between? So you're being intentional with everything, your expenses, your everything.
Wow.
Really, when it comes to your money. Yes. Okay. And tracking and making sure I am on plan. Okay. I am on point. And once you reach that small goal, if it was a quarter and you need to have saved, let's say 150,000 to start a business, tap yourself in the back. At that point, you can go buy yourself a pair of shoes. Okay, I was about to say no one with the interest. Mtu asilianike if I recycle with dresses. The interest. With the interest. Yes. Okay, fantastic. Yes. Thank you so much. That was a fantastic session, just talking about different asset classes and talking about how to think about the financial goals. And I think the key word is it's personal. It's personal. Everybody's in a different space, but at the end of it, there are opportunities in Kenya today. Yes. They might not give you the returns that you're getting globally, but check yourself. Exactly. If
If you don't have extra funds to lose,
Yes.
start at home and grow from there.
Exactly.
All right, thank you so much. That was Rose Elangare, who is the founder as well as the Chief Executive Officer of Vasili Africa. We were talking about planning for your finances with a focus on investments. She's given us a lot to think about, but I think I appreciate her parting shot. Be intentional, track, be audacious. So if nothing else, what are you going to do? At least, Mimi Mkiona, I have repeated my outfits. Do not kill me because I am just doing what Ella told me to do. Buy investments as opposed to delay gratification. Put your money in investments, get a return, and when you earn from that return, then you can reward yourself. What are you going to do? I'd really like to hear your challenge. Please be able to speak to us or even speak to Vasili Africa. That's at Vasili Africa, at Metropole TV, at Bithemwema. Let's have this conversation going because it's about changing our perspective to be able to change our future. That's all the time we had for you today. Thank you for your time and see you same time tomorrow.